Hey, it's Oscar here with this week's recap and momentum overview of the top blockchains and dapps across the key metrics showcased on Token Terminal. Let's dive in. This week we listed one new project, which is Pseudoswap, an NFT marketplace built on Ethereum. And it's not just another basic NFT marketplace, as it's actually a concentrated liquidity automated market maker protocol designed specifically for NFTs. How it works is that liquidity providers deposit NFTs and funds into Pseudoswap and receive trading fees from users who are trading against this liquidity. You can see the liquidity provider's share of earnings as the supply side revenue on this chart. The Pseudo protocol is currently owned and governed by the Pseudo team and its investors, and they take a cut of the total fees paid by users. You can see this as protocol revenue, so the dark blue bar on this chart. Pseudoswap took off really well and has already seen over $20 million of organic volume over the past 7 weeks, so it's definitely worth keeping an eye on. Then we also released a new research piece this week on DeFi exploits titled The Trends, Patterns, and Lessons Learned. I definitely recommend that you give it a read and subscribe to our newsletter if you haven't already. And then on to weekly movers. I'll pick out a few key highlights to share here, and if you want to read the full newsletter, just head over to our Substack, which is linked in the description. This week we saw TrueFi, a lending protocol that offers under-collateralized loans for verified borrowers, top the list with a 37% increase in total value locked. A possible driver there has been their proposal for DYDX to launch lines of credit on TrueFi for qualifying market makers, which was reviewed on August 17th. Maple Finance saw one of their pool delegates, Maven11, an Amsterdam-focused blockchain and crypto asset investment firm, launch their third pool on Maple. Another thing worth noting from Maple's charts is that new loan originations have started to roll in again after a 2-month gap that saw no fees accruing to the protocol. If at any point you're not familiar with what a metric means or how it should be used to assess the performance of a protocol, you can check the show notes to find video explainers of each metric that we feature in our newsletter. Looking at revenue development, we saw a general increase in volume for derivative protocols on Arbitrum, including CAP and GMX. CAP topped the list for both total and protocol revenue with a big day on August 19th, while GMX has grown more steadily over the past few weeks. Looking at valuation multiples, we saw a general week-over-week decrease as asset prices trended down. Tornado Cash is worth mentioning as it saw its fully diluted market cap decline from over $300 million to $90 million after the US Treasury decided to sanction the privacy protocol on August 8th. Hope you like this quick recap and make sure to subscribe so you stay in the loop on everything related to fundamentals for crypto. See you next time.